Okay, let's unpack this. Have you ever, tried to use a popular blockchain only to find yourself facing these really high fees and slow transaction times?
Oh yeah, it's a classic problem.
It's a common hurdle in the world of decentralized tech, and it's precisely the problem a project called Arbitrum is trying to solve. For this deep dive, we've got a stack of sources covering, everything from recent market moves and technical indicators to long-term price forecasts and even the tricky parts of its governance.
Right.
Our mission today is really to cut through the noise, deliver the most important insights so you can feel truly well-informed about Arbitrum.
Exactly. At its core, Arbitrum is what we call a layer 2 scaling solution, built right on top of Ethereum.
Layer 2, okay.
Think of it like a faster, more efficient highway built over a busy main road. It aims to reduce costs and speed things up, transaction throughput, while still, and this is key, leveraging Ethereum security.
That's a crucial distinction. But what are the potential trade-offs, maybe, if any, when you move operations to a layer 2 like this? Even if it's leveraging Ethereum's security. We're going to explore how it's navigating those dynamics right now, given some really fascinating recent developments, conflicting short-term predictions, and, frankly, some big questions about its future. So, to really get Arbitrum, we first need to understand the fundamental problem it's solving. Our sources describe Ethereum's challenge as essentially a limited supply of block space.
Yeah, finite space.
And when demand for that space goes up, it gets slow, it gets expensive. It's like trying to host a huge bustling city on just a single lane road.
That's a good analogy.
One source even compared early Ethereum to running your own physical servers for a website, or get this, an old service like GeoCities.
Wow, GeoCities,
Yeah.
which really highlights how limiting that was for innovation back then.
That's precisely where layer 2 solutions, or L2s like Arbitrum, come in.
Arbitrum specifically is a roll-up.
A roll-up, okay. What does that mean exactly?
What that leads is it bundles lots of transactions together off-chain, kind of compresses the data, and then posts just a single bundled transaction back to Ethereum's main chain.
Ah, I see.
This significantly expands that block space, leading to much greater throughput and, reportedly, something like a 95% reduction in fees compared to doing it directly on Ethereum's main layer.
95%, wow.
Yeah. One source brilliantly calls it broadband for Ethereum. Makes new kinds of applications possible, much like AWS did for the early internet.
That broadband for Ethereum analogy is really sticky. So if it's expanding block space that much, does that mean it enables entirely new kinds of applications? Things that just weren't practical before?
Precisely. It's not just about speed, it's about supporting more complex, more data-heavy applications. And Arbitrum actually offers specialized products for different needs, too.
Like what?
Well, there's Arbitrum One. That's their main roll-up chain, designed for high-security stuff like DeFi.
Okay, DeFi makes sense.
Then there's Arbitrum Nova. That's a second-level network built more for things like games, NFTs, social apps, things that need more flexibility, more throughput. Maybe with a slight trade-off in security through something called a Data Availability Committee.
A committee? Who's on that?
It includes some big names, actually, like Reddit, Google Cloud.
Interesting. Okay, what else?
And finally, there's Arbitrum Orbit that lets developers easily create their own customizable blockchains or even layer 3s that then settle back to Arbitrum.
Layer 3s on top of layer 2s. Okay. That's a lot of infrastructure being built out. So with all this activity, what does this reselling of Ethereum's block space actually look like as a business? How do they, make money from this faster highway?
Well, our sources give us a little peek at the numbers. Over a 365-day period, the call data costs, that's the data Arbitrum paid to put back onto Ethereum, were about $34.2 million.
Okay.
Call data is basically the bare minimum transaction data an L2 needs to send to Ethereum Layer 1 just to prove its transactions happened correctly.
Gotcha. Minimal proof.
Right. So after covering those costs, Arbitrum saw a net value of $13.2 million. That results in a gross margin of around 27.8%.
Nearly 28%. So it shows a clear economic model is working there.
Yeah, definitely a functional model at play.
So we've set the stage. Arbitrum is building that faster highway for Ethereum. But how is that highway performing today? Let's zoom in. It's July 27th, 2025, and see what the market's been saying about Arbitrum's current value, especially with some really impactful recent events. You're probably wondering about its current price. Our sources show it hovering around, say, $45.46. Some slight variability between reports, but in that ballpark.
Okay.
But what's really been driving things lately?
Well, here's where it gets really interesting. The primary catalyst, the thing really fueling bullish momentum, according to one source, is PayPal's big decision.
Ah, yes, the PayPal news.
They decided to expand their PYUSD stablecoin onto the Arbitrum network. That was announced back on July 15th.
And that's a huge deal, right? Institutional adoption.
Absolutely. It's a significant institutional endorsement. Signals growing confidence in what Arbitrum can do, its capabilities, its reach.
That PayPal news is definitely a massive vote of confidence. But, as with any fast-moving tech, there are always bumps in the road. I remember hearing about a pretty significant security incident around that same time in July.
Yes. The GMX exploit.
Right. What happened there, and how did Arbitrum and the ARB price sort of weather that storm?
Indeed, the GMX exploit, also on July 15th, resulted in a $42 million loss. It was due to something called a re-entrancy vulnerability.
Re-entrancy.
Well,
What's that in simple terms?
Basically, it's a specific kind of smart contract flaw. It lets a hacker repeatedly call a function within a contract before the first call is finished, essentially draining funds multiple times over.
Ouch. 42 million is serious.
Very serious. But despite this breach, the ARB price has, largely maintained its upward trajectory. It suggests that, for now at least, these big adoption milestones are having more impact on trader sentiment than even significant security concerns.
Result.
And adding to the complexity of that week, remember we mentioned unlocks.
Yeah, the token unlocks. People always worry about those pushing the price down.
Well, despite the July 16th unlock of about 92.65 million ARB tokens, that's nearly 1.9% of the circulating supply. Arbitrum showed remarkable resilience again. Its price actually climbed. It hit $0.49 on July 21st.
Wow, it went up after an unlock.
Yeah, suggesting that this institutional adoption, the PayPal effect maybe, is currently outweighing that unlock pressure. But it's really important to remember over 30% of the total token supply is expected to unlock in the next 2 years.
30%?
Yeah, and there was a huge one, over 1.1 billion tokens back in March 2024. So periodic selling pressure from those early recipients is definitely a factor to keep watching.
Okay, so we have this kind of perfect storm of events, right? Big positive news from PayPal, a significant token unlock which usually spooks the market, and a major security exploit all happening around the same time. How does this whirlwind translate into the overall market mood, the sentiment, and what are the technical charts telling us right now?
Yeah, it's a fascinating mix. The market sentiment, if you look at the fear and greed index, is actually in the greed zone, somewhere between 64 and 73.
So optimism, basically.
Suggests investor optimism, yeah. Yet at the same time, some technical indicators are suggesting, bearish undertones, or maybe just neutral positioning, reflecting a degree of caution among traders.
Interesting. So greed index is high, but the charts aren't quite screaming buy.
Exactly. It highlights that a high greed index doesn't always mean it's all systems go on the technical charts themselves. There's a bit of divergence there.
Okay, let's get technical for a moment then. What do the charts tell us about Arbitrum's current strength? Potential future moves. You hear terms like RSI, moving averages. What do they mean for ARB right now for someone trying to gauge its short-term momentum?
Well, our analysis digs into that. It reveals some compelling bullish indicators on several time frames, but others are remaining neutral. So the current price, that 45 cents range, it sits above both the 7-day simple moving average, which is also around $0.45, and the 20-day SMA, which is a bit lower at $0.43.
Can moving averages just smooth out the price, show the trend? Price above is generally good.
Generally bullish, yes. Then there's the relative strength index, the RSI. It's a common gauge, tries to measure if an asset is overbought or oversold, basically, how strong the recent buying or selling pressure is.
Right.
That's sitting around 60 to 61.55.
Right.
Now, that's considered neutral territory.
Neutral is good here.
It's actually quite promising. It means Arbitrum still has, plenty of room, plenty of gas in the tank for upward movement before it might be considered too hot or overbought and maybe due for a pullback.
Okay, what else? Massy D.
The Massy D. It tracks momentum and trend changes. Here we see a bit of a mixed picture. The main line is above the signal line, which usually points to bullish momentum. But the histogram is negative. That suggests that for the very, very short term, there's a little bit of selling pressure, like a slight headwind against the overall upward trend. The stochastic indicators, so neutral.
And Bollinger Bands.
Finally, the Bollinger Bands. They show ARB trading in the upper portion of its recent range, but not right at the top edge, not at extreme levels. This suggests there's still potential for continued appreciation without an immediate high risk of reversal.
Okay, so if we combine what all these technicals are saying, the story seems to be one of, what, cautious optimism?
I think that's a good way to put it.
There's underlying bullish momentum, sure, but those mixed signals, those neutral positions, they tell us traders are still weighing the upside against ongoing risks, like those future unlocks.
Exactly.
It's not a full steam ahead signal, maybe more like a slow, steady climb, with traders keeping some caution. So for people looking at maybe entering or exiting positions, what are the key price levels, support and resistance?
Based on Binance data, the immediate resistance, the ceiling right now, looks to be around 51 cents. That matches the upper Bollinger Band, and it's a recent high point.
Okay, somebody 51 cents is the level to watch above. What about below?
Below the current price, immediate support is around 32 cents. There's stronger support, a more solid floor, down at 25 cents.
And pivot points. I hear that term sometimes.
Yeah, the pivot point analysis essentially identifies a price level where buying and selling pressure are roughly in balance. For ARB right now, that's $0.45.
Right where it's trading.
Exactly. Think of it like the market's current center of gravity. It's proven to be a pretty solid foundation for the recent price action, suggesting it's a key level traders are definitely watching closely.
Okay. And what about just the basic activity? Trading volume, volatility. Is it easy to trade? And how wild are the price swings day to day?
The main pair, ARB-USDT on Binance, shows a healthy 24-hour volume, around $23.65 million.
So liquid enough.
Indicates sufficient liquidity, yeah. You shouldn't have trouble getting orders filled reasonably quickly. And for volatility, the daily average true range, or ATR.
ATR, what's that measure?
It just measures the average range between the high and low prices over a set period. For ARB, it's about 0 and 3 cents per day recently.
3 cents.
Yeah, it suggests moderate volatility. So while there are opportunities there for active traders, it's not swinging wildly out of control. It maintains relative stability for longer-term positions, too.
Okay, let's shift gears a bit. Beyond the price charts and the trading numbers, what's actually happening on Arbitrum's network itself? What kind of applications are finding a home there? What does that tell us about its fundamental strength? Why developers are choosing Arbitrum?
Arbitrum has seen really strong ecosystem growth, particularly in areas like real-world assets, RWAs, and DeFi integrations.
RWA is a hot topic.
Definitely. It hosts top DeFi protocols you've probably heard of, like GMX, Radiant Capital, and it started attracting NFT marketplaces too. This thriving on-chain ecosystem, it directly boosts ARB's use case, especially as more projects and DAOs need the token for governance participation.
So the growth is real, tangible on the network.
Very much so.
That's great to hear about the growth, but which apps specifically are driving the most value? Like, where are the transaction fees really coming from? Where's the core economic activity happening?
Well, our sources show that bridges, things like Stargate, Layer 0, they're driving the most gas fees right now.
Bridges. Makes sense. People moving assets onto Arbitrum.
Exactly. That's the first step for many users. Beyond bridging, DeFi and payments are also significant drivers of activity and fees.
Okay.
But here's an interesting tidbit. Over a recent 30-day period, something called an MEV bot.
MEV, maximal extractable value, those automated bots.
That's the one. Essentially a high-frequency trading algorithm looking to profit from tiny price differences on decentralized exchanges, arbitrage opportunities, that kind of thing.
Okay. So what about this bot?
This one MEV bot actually drove more activity, more transactions to Arbitrum than giants like Uniswap and GMX combined.
Wait, one bot drove more activity than Uniswap and GMX?
Combined, yeah, over that 30-day period.
That's quite the stat, and maybe a little unsettling thinking about it. It really shows the sophisticated, almost hidden financial activity happening on these networks, like the high-frequency traders of Wall Street, but now on the blockchain.
It definitely highlights the evolving nature of on-chain finance, for sure. These bots are a major part of the ecosystem now.
Okay, now let's turn to something critical, but maybe often overlooked, especially when people are just focused on price governance. What's the situation with Arbitrum's governance, the DAO, the decentralized autonomous organization? How's that functioning?
Right, governance.
Yeah.
And turning here, this next point presents, well, a pretty fascinating challenge. Recent reports are highlighting a significant decline in voter turnout within the Arbitrum DAO. A
decline. That doesn't sound good for a DAO.
No. And it coincides with a pretty substantial drop in the ARB token's value itself. It fell around 71% in the year leading up to a report from May 2025.
71% drop. Ouch. And lower voter turnout alongside that. What are the real-world consequences of that low participation? Does it actually hinder Arbitrum's ability to make decisions or adapt?
It absolutely can, yeah.
Yeah.
Low participation makes it really difficult for proposals to meet the required quorum thresholds.
Quorum being the minimum number of votes needed to pass something?
Exactly. So if not enough people vote, even good proposals can get stuck. It can stall critical decisions, potentially hindering the project's development, its agility, its ability to respond to the market.
Gridlock, basically.
Pretty much. The community is actively discussing ways to fix this. There's one proposal, for example, to lower the governance proposal passage rate, the quorum from the current 5% of eligible voting power, down to 4.5%.
Lowering the bar, would that help?
Well, it might make it easier for proposals to pass, avoid that gridlock. But there are potential drawbacks, too.
Like what?
It could allow proposals to pass with less broad community consensus. It might potentially increase the influence of smaller but very active factions within the community, or maybe even large individual token holders, the whales.
Right, so it's a delicate balance between making decisions efficiently and ensuring true decentralization and broad support.
A very delicate balance, yeah.
It certainly sounds like it. Are there other solutions being talked about, maybe across the wider crypto space, to boost engagement and keep governance healthy?
Oh yeah, lots of ideas floating around. Things like voter incentives, rewarding people for participating, making it easier to delegate your voting power to trusted representatives if you don't have time to follow every proposal.
Delegation.
Simplifying the governance interfaces, just making it less intimidating, better education on what proposals actually mean. Even things like gamification, trying to make voting more engaging.
Gamification of governance. Interesting.
Yeah, the core idea really is just to lower the barrier to participation and make it feel more worthwhile for the average token holder.
Okay, so Arbitrum isn't operating in a vacuum, obviously. This Layer 2 space is a fierce battleground. Who are its main rivals? How does Arbitrum stack up against them in this high-stakes race for users and developers?
Yeah, definitely not alone. Its primary competitors among other rollups include projects like OP Mainnet, formerly Optimism, and Base, which is Coinbase's L2.
Right, Base made a big splash.
It did. We can also consider sidechains like Polygon, even though Polygon uses its own token for fees, unlike Arbitrum relying on ETH eventually. And then you have completely different blockchains, alternative layer ones like Avalanche, that also aim to solve scalability, just in a different way.
So a mix of other L2s and some L1s. How do they compare in terms of actual activity? Like, where is the value being captured on these networks?
Well, one way to look at it is gas fees generated by their top applications. If you look at the top 10 projects on each network, Arbitrum actually leads the pack, generating about $14.8 million in fees from its top 10.
Okay, number one there.
Polygon follows with $12.2 million, then OP Mainnet with $11.9 million.
Yeah.
Base, even though it's newer, has annualized gas fees around $14.4 million. That shows really strong product market fit, especially with apps like Friend.tech driving a lot of that early on.
Almost matching Arbitrum already. Wow. And Avalanche, the L1.
In contrast, Avalanche, the alternative layer 1, had only about $5.3 million in gas fees from its top 10 projects during the same period.
Much lower.
Yeah, it really highlights Arbitrum's strong position among the L2s right now, at least in terms of generating fees from top on-chain activity.
That comparison is pretty stark. The layer 2s seem to be really outperforming the alternative L1s, at least by that metric of top app activity and fees. But this brings us to a really fundamental question, one that affects anyone thinking about investing here. In this whole complex blockchain ecosystem, where does the true long-term value ultimately end up? Does it settle on the base layer, the L1 like Ethereum, or does it go to the innovation layers, the L2s like Arbitrum built on top?
That is the big question, isn't it?
Yeah.
And our sources suggest that, historically at least, more value if you measure by market cap or total value locked, TVL.
TVL, right. The amount locked in DeFi protocols.
Exactly. More of that value has tended to accrue to the base layer networks, the layer ones like Ethereum. And the expectation is that this trend will likely continue. They are the foundational settlement layer.
So the base layer captures the most overall value.
Likely, yes. However, the higher returns, the potential for bigger percentage gains, are probably more likely to accrue to the protocols and applications built on top of those layers, like Arbitrum.
Ah, okay. Higher risk, higher potential reward on the upper layers.
Exactly. It comes with higher risk, but also higher potential reward. Think about it this way. If Ethereum, say, reaches a massive $2 trillion market cap someday.
Hypothetically.
Hypothetically, yeah. Then all the layer 2s combined might be worth something like $200 to $400 billion. Now, Arbitrum's market cap was around $1.4 billion back in November 2023, and more recently, around $2.3 billion.
So still tiny compared to that potential L2 market size.
Exactly. Shows significant potential for growth if it manages to capture and maintain a large share of that overall L2 market in the long run. Big if, of course.
Right, big if. So given all of this, the tech, the competition, the market dynamics, the value accrual question, what are the price predictions saying, especially looking further out? I imagine there's a pretty wide range of forecasts, maybe even some wildly different ones.
You are absolutely right about that. The predictions vary significantly across our sources. Let's start short term, say the rest of 2025.
Okay, what's the vibe for the next few months?
It's mixed. Some sources predict potential dips still. They see ARB possibly dropping by maybe 19-24% by late July or August, settling somewhere in the $0.30 to $0.50 range.
So maybe retesting those lower support levels we talked about?
Could be. One source even suggested it might not be very profitable in the short term, despite the strong fundamentals we discussed, just because of recent declines and those ongoing token unlocks creating selling pressure.
But didn't other sources highlight its resilience?
Exactly. In contrast, another source really emphasizes that resilience, that upward trajectory we saw even after the recent unlocks in the GMX exploit. So short-term picture. A bit unclear, depends who you ask.
Okay. And what about the longer view, say looking out to 2030, even further? This is where I imagine the predictions might really start to diverge wildly.
Oh, they do. This is where the divergence becomes quite stark. One source suggests ARB could reach somewhere between $3 and maybe $5 or even higher by 2028-2030. That's assuming it maintains its market leadership position among L2s.
$3 to $5. Okay, that's a significant jump from $0.45. What else?
Another source is way more bullish, highly optimistic. They're forecasting an average price of around $4.88 in 2030. But then they go further, potentially reaching hundreds of dollars by 2040 and even nearly $500 by 2050.
Wow. Okay. Hundreds. $500 by 2050. That's ambitious. Is everyone that bullish?
Not at all. Another source is far, far more conservative. They predict an average price of only around $11.19 in 2030.
$1.19 versus $4.88 in 2030. Big difference.
Huge difference. And this conservative source sees a maximum of only $11.81 by 2050. They explicitly state it won't reach $100 or $1,000.
Okay, that is a massive difference in outlook. From $12 to nearly $500 by 2050. It almost makes it harder to know what to think. What are the absolute biggest swing factors? What assumptions are driving these wildly different outcomes? Is it just about competition, or are there deeper disagreements?
It really depends on several critical dimensions and how much weight each forecaster gives them. Things like, will Ethereum network demand and congestion continue, driving the need for L2s?
Right, the core problem Arbitrum solves.
Will the DeFi and NFT ecosystems on Arbitrum continue to grow and thrive? Will Arbitrum successfully implement its own protocol enhancements like Orbit for L3s and Stylus for new programming languages?
Technical execution, okay.
How will it fare against that intense competitive pressure from other L2s, especially newer tech like ZK rollups? And then there are the ever-present regulatory risks.
So lots of variables.
Lots. The fundamental disagreements often come down to how much each source weighs these factors and their core assumptions about Arbitrum's ability to navigate all this, innovate, and capture that long-term value we talked about.
Okay. So for someone listening trying to process all this, what are the key pros and cons of, say, considering an investment in ARB, given all these variables and uncertainties?
Right. Boiling it down. On the pros side, Arbitrum is a top-tier layer 2 right now, measured by total value locked and ecosystem activity. It has strong backing from its core developers, off-chain labs. The tooling is generally considered developer-friendly.
Good for attracting projects.
And it clearly benefits from increasing integration with institutional players, like that PayPal example and other DeFi protocols building on top of it.
Okay, those are strong positives. What about the cons?
Well, the cons include, obviously, high price volatility. It's crypto. Strong competition, especially from potentially more advanced solutions like ZK rollups, which promise even better efficiency or security trade-offs down the line.
The tech keeps evolving.
Constantly. Regulatory challenges are always a risk for any crypto project. And importantly, its dependency on Ethereum's own roadmap. Arbitrum's fate is tied to Ethereum's, which limits its autonomy to some extent.
Tied to the mothership. Okay. And beyond those sort of standard investment considerations, what are the biggest, maybe more fundamental risks that our sources highlighted? Things potentially investors really need to grapple with?
Beyond the technical risks and the competition, two really significant risks stood out in the source material. The biggest unanswered question, I think, and maybe the most critical insight for any potential investor, is Arbitrum's value capture risk.
Value capture risk. Explain that a bit more.
Unlike Ethereum, where every transaction requires ETH, burn some ETH, creating clear utility and demand for the token, the long-term fundamental economic reason for the ARB token itself to accrue value isn't fully defined yet.
So the network can be successful, but the token doesn't necessarily capture that value.
Potentially, yes.
Yeah.
Or it's not clear how it will consistently capture that value. Where will a sustainable structural demand for the ARB token come from, beyond just governance voting? That's a challenge many L2 tokens face, finding that clear economic hook.
That's a crucial point. Okay, what was the second big risk?
Second, one source explicitly states that Arbitrum is, quote, centralized today.
Centralized, but it's DAO.
Well, yes, but the path to full decentralization, where the community truly controls everything without reliance on the initial team or foundation, is still ongoing. While they have a roadmap towards it, the source indicates it's not fully there yet. That's a crucial consideration for a project whose core promise includes decentralization.
Right, the journey, not just the destination.
And ultimately, its success is also fundamentally tied to Ethereum's success. If, for some reason, Ethereum were to falter or fail long-term, so would Arbitrum. It relies on Ethereum for its security and finality.
Okay, that was quite the journey into Arbitrum. Wow. From understanding its foundational role as, that crucial scaling solution for Ethereum to navigating the whirlwind of recent market events, the PayPal integration, those token unlocks, the exploit. We've really peeled back the layers here.
We covered a lot of ground.
We've seen its impressive ecosystem growth, dug into those sometimes contradictory technical indicators, and wrestled with the complexities of its governance, that voter turnout issue, and the really fierce competitive landscape it operates in.
Yeah, it's clear that Arbitrum is undeniably one of the most important projects in the crypto space right now. It's laying down infrastructure that could be vital for the next wave of blockchain applications.
Yeah.
But as always with these things,
Yeah.
understanding the nuances, asking the critical questions like that value capture one, and of course, doing your own research is absolutely paramount before making any kind of financial decision.
Absolutely. So what does this all mean for you listening right now? Despite Arbitrum's clear technical prowess and its current market leadership position, how will it manage that tricky balance between the promise of decentralization and the practical need for efficient governance? And perhaps most importantly, can it clearly define and solidify its value proposition for ARB token holders in the face of relentless innovation and competition? What stands out to you as the biggest takeaway or the most pressing question from today's deep dive?